Nigerian equities market experienced a strong rally with shares up 61% in the last 52 weeks. Joining us from the Lagos studios for a look at investment in the equity space is Dayo Obisan, who is Head of Investment Management at Chapel Hill Denham. Good morning, Dayo. Well, this market really has run very hard. 61% in the last 52 weeks, 20% up this year. What's behind it?
There's been a lot of renewed interest, especially from pension fund administrators. A lot of local interest has been growing as well, and that's what has largely driven the market.
Right, well, let's look at some of those shares there. We've got some big shares that have moved. We're thinking of Nigerian breweries, related to that, Guinness Nigeria, trading at big premiums to the market as a whole. When a market runs like this and shares like that run so hard, we would expect profit taking?
Well, I wouldn't put it at profit taking at the moment, because truth be told, a lot of this Nigerian breweries, like just as you rightly pointed out, is trading at a premium, at a very good premium. But the truth of the matter is, as one of the big monies, as the PFAs, foreign fund managers, one of the key things you chase is liquidity. This Nigerian breweries is one of the most liquid stocks you have, accounting for about 13% in terms of market cap. So that's why some of these stocks, though they are richly priced in terms of valuation, but we'll tend to see more monies chasing them because of liquidity, if they're trading at a discount relative. And I mean, when I say relative, not just within the Nigerian context, a lot of the foreign managers are looking at a basket of African equities, so not necessarily just within the Nigerian context alone.
Well, two liquid shares, the breweries one certainly. Now, Nestle is another one of those shares. How's that been doing?
Nestle has been growing quite aggressively, though it's trading at much premium, as you rightly said, in terms of the consumer goods space and even within the conglomerates space as well. But the truth of the matter, and one thing we have to bear in mind, as more foreign managers come in, what are the names they look at? They look at solid management, foreign participation, access to other source of capital outside the local market. So that's why you see companies like Nestle, they keep going from strength to strength, if though they are richly priced and much at a premium compared to the local counterparts. So as more foreign managers do come in, say again?
Sorry, just looking at the broader economic environment that you're in, inflation 9% in January, which is the lowest it's been for several years. Difficult to think of it in single figures. Expecting lower inflation, and what is the central bank going to do about interest rates? Interest rate at 9%. You remember we're coming from a high base. Just about this time last year, when fuel prices was the subsidy was taken off, and fuel went from 65 to 97 naira. There was a huge surge in price of food, which constitutes about over 50% of the whole consumer price index. So we're coming from a high base. Now that things are sort of like stabilized, that's one of the key drivers of having a single-digit inflation rate. Now, the second thing is going forward, what we expect to see. We don't expect there to be a rise to double digits in quite a hurry. In terms of CBN, what they're going to do in terms of monetary policy rates, the CBN has held it quite stable for 12% for quite a while. Now, we expect there to be a reduction, however, between maybe 25 to 50 basis points from the end of this quarter and going forward, and expect that to be stable for at least H1, for half of the year. You mentioned a moment ago foreign investors keeping those liquid shares very strong, the premium on them. But of course, for Nigerian fund managers, there are foreign exchange controls. A lot of countries have them. We in South Africa, they remain an irritation, although they have been eased quite a lot in recent years. So the effect on the distortion of the market, really? A distortion on the market, I don't quite understand how there will be a distortion, because one, interest rate, foreign exchange rates have been quite stable for quite a long while. The CBN has got a good, done a very, very good job, right? Quite commendable in holding that quite stable. And a lot of other indices that have been supporting that fact. I mean, our foreign reserves have been quite stable and quite growing as well, about 47 billion at the moment. So that has been quite helpful
Yeah, I meant
so if that answers your question.
Sorry, Dayo. Yeah, I meant distortion in the sense that if investors have fewer options, it can keep the Nigerian market artificially high. So it can be a distortion for benefit, if you like, rather than a negative. Let's look at the bank's earnings season. That's due to kick off in 2 weeks. So what are you expecting there, and how is it affecting your investment calls?
Well, having to make investment calls sharply because of banking season earnings season coming up is, as a fund manager, because you should have taken your position way before now. And in terms of asset allocation, because asset allocation is one of the key things that drives your performance as a fund manager. Stock picking is quite good and quite essential, quite important as well. But asset allocation is the bulk of the work. We expect some interesting things coming up from the banks. And I believe a lot of that has been factored in the pricing. A lot of the banks at the moment are trading quite close to their rated valuation, which has been out published by different analysts over the last couple of months. We expect results to be released to be largely in line with our expectations. And in terms of having to go into the market, I think now it's the time to see where your stock picking prowess how it will play out in the next couple of weeks when the bank starts releasing these results.
And let's move to the industrial side, a company that is often mentioned and often in the news, which we haven't talked about so far in terms of the big companies, Dangote Cement.
Could you repeat that again, please?
Dangote Cement?
Yes.
The industrial side of the economy.
Could you repeat the question?
Yeah.
Yes. Well,
prospects for that. I mean, we've talked consumer stocks and we've talked banking stocks, but the broader industrial scene? Yeah.
For one thing, before we even talk and narrow it down to Dangote Cement, the cement industry space, how is it playing out? We've got huge population side that places a lot of premium culturally, even on real estate and real estate ownership. Now, the production, one thing you have to know about cement is capacity. And capacity of the company, a particular company, to produce a certain quantity. Two, how much they're revving up in terms of that capacity. Now, Dangote Cement has a very huge capacity, largely followed by WAPCO, and currently it accounts for about 24-25% of the whole market cap. Now, one thing that we've continued to see is investors just holding on the side, because it's not been growing quite aggressively, maybe like the banking stocks have been doing. But what we expect going forward is increase in production. You know, there was a talk about cutting back production from the Obajana plants due to maybe an artificial glut in the market, or a glut in the market, as the case were. But what we expect to see going forward is as this company revs up capacity, more revenues, and that will delve into more dividends for the shareholders.